ladies and gentlemen. Welcome back to another edition of Capital Concepts. I'm Jeff Schuler. I am the Director of Research for Spiker Consulting here in Deerfield Beach, Florida. The last couple of episodes have met with some pretty good response. I'm very happy with them. And we've spoken about a number of controversial issues, but also about the precious metals and where they're going. And my goodness, what do you think of the last moves? Today, I'm looking at 1,062 as a peak today on gold, 1795 on silver, 1357 on palladium. I'm sorry, on platinum, 326 on palladium. I talked today on my radio show about palladium. If you get a chance, listen to it. I'm telling you, ladies and gentlemen, it is the metal of the 21st century, and it is exploding. It's got a lot of upside. It's going to continue. If you didn't get to watch the show on palladium, the piece on palladium, watch it. I recommend it very highly. Now I'm going to talk about an issue that I spent some time with over the last year or so, and that is the housing market. A lot of talk and a lot of issue and a lot of time has been given to what went on with the subprime loans. And all of a sudden, for some reason, that's not a problem anymore, which to me is absolutely crazy. It's patently insane. But there are two more shoes falling in that marketplace. One are the prime loans, the jumbo loans, the ones done by bankers and lawyers and stockbrokers and people that make some money. Small business owners especially fall into this category. Here's the thing, and I've said this for a while now, but I'm going to do it here for the first time. Those loans were put out 3, 4, 5 years ago, all with about a 5-year reset. Now they were done either interest only or minimum payment, which was under interest only, negative amortization loans. They have to be reset. Those properties are down anywhere from 20 to 50% in value. Nobody in their right mind is going to pony up an extra $300,000, $400,000, $500,000 for a piece of property that's not worth it. They're not going to throw that money away. The banks aren't going to refinance it. So what's going to happen? We're going to have another round of toxic mortgages. The next shoe, the third shoe, is going to be the most devastating one, and that's commercial real estate. We have commercial real estate down here in South Florida that is literally 80% below where it was at the peak. 80%. Why? The tenants are gone. They've taken off. They couldn't afford the rent anymore. Either jobs were lost, products were being driven down in price. Bottom line is this: they've got empty buildings. Empty buildings mean lower value on the real estate. It used to be, in commercial real estate, sound lending, 40% down, 30% was pretty much the limit. And even if you're Donald Trump, 20%, they were doing, ladies and gentlemen, the same thing, 10% down, 5% down, interest only, coming up on the resets. And those properties are so far away, so far out of line in valuation, they're done. And if you think that an individual might pony up a few $100,000 extra to keep their home, possible. Lunacy, but possible. Commercial real estate? These are business people. They're declaring bankruptcy, they're walking. It's as simple as that. What does that do to the banks? All of the problems are going to be shown. What does this do to the economy? We saw what the subprimes did. It's going to be a debacle of proportions that make the last shoe, the first shoe, look like child's play. Now, very interesting article I just got done reading. The flood of foreclosure shows no sign of ebbing. I happen to agree with that, but there's some points in here that are amazing. The country's worst housing downturn since record-keeping began in the late 19th century may only get worse since foreclosures, which started with subprime bars, is moving now to the higher prime loan market, as I just talked about, because of mounting unemployment. You can't tell me that the double-digit unemployment is okay. That's why the stock market rally is insane. The recent crisis in the housing sector has devastated families and communities across the board. Here, Florida had the nation's highest rate of homes. Listen to this. 23% of the homes in Florida are either in foreclosure or delinquent on mortgage payments in the second quarter. The latest news for Florida is horrifying. This is a steep error. The recent pickup in sales and home prices in some regions has been heralded as a sign that the recent crisis in residential real estate may be closing or bottoming out after the steepest price decline since at least 1890. Not 1990, 1890. Last bit on this I want to pull out. It says 6,600 home foreclosure filings per day, according to the Center for Responsible Lending, a nonpartisan watchdog group based in Durham, North Carolina, with nearly 2 million already this year. There's no stop. Our government is admitting that unemployment is going to go over 10% and stay there for a while. They think it may be, going to be ebbing back sometime in the late part of next year. How? How? There's no reason for it. There's no fundamental reason for it. The consumer is what drives this economy. If the consumer's out of money, the consumer's not making money, that's it. There's nothing to buy. You get the credit card defaults. Start being added to that. Banks won't have money to lend because people won't have money in the banks. Even though it's just paper garbage, they still need it. What do? There's a reason that the metal markets are exploding. I've said this over and over and over. That's why gold is at its peak, or historic peak, going much higher. That's why silver is poised to make a historic run, beyond anything we've seen before. Palladium, giving you all the reasons why palladium is going to be going back to its previous high. I don't know the exact time frame, but I'm pretty much willing to bet 450 to 550 is in the short term, is in the early foreseeable future. And our clients are going to net 40 to 150% on their money, depending upon the program they use with us. That I can tell you, in my opinion, without a shadow of a doubt. If you want to learn more about that, you call us, 888-779-5374. It's what we do, it's how we do it. Now, I'm going to give you a different tack really quick before we end this segment of Capital Concepts. Talked about metals. Right now, we have a phenomenal opportunity in an area that hasn't run yet this time. It's consolidated at what I see as a bottom right now. It's gone up a little bit, pulled back, gone up a little bit, pulled back. Crude oil. We can get you crude oil, not options, not futures, not ETFs, no BS. Actual barrels of West Texas Intermediate London Brent crude. Right now we're sitting at 69.01 for London Brent, which I happen to like the most. It's the most volatile, so we can make the most money. It's the cheapest. West Texas Intermediate, 71.96. My price target is $100 a barrel in the short to intermediate term, 125 to the previous high of 147 in the next year to 18 months. The thing about oil is that it doesn't need fundamentals as much as anything else. It is being used as a currency, it is being used as a hedge, it's being used the same way as gold. It's being hoarded for its value as a hard asset. It's 100% liquid with us, you can sell it at any time. It's a magnificent way to hedge yourself and make some money at the same time. And again, if we can't give you a high potential to make 30, 40, 50% or more net on your money, we're not going to bother. We're not going to bother. So ladies and gentlemen, think about this. The Russians are now the world's leading country selling oil. The Chinese are buying up everything that they can produce. The demand is at an extremely high point, and the Saudis are starting to talk about $90, $95 a barrel of oil. $90, $95 a barrel, our clients are making good money. Good money. If you want to learn more, give us a call. 888-779-5374. Visit the website, spykermetals.com. That's SPYKER metals.com. Ladies and gentlemen, I hope you enjoyed this segment of Capital Concepts. Have an absolutely fantastic day. Until the next time we talk, may God bless you all.